right, good morning, fellow traders, and welcome to today's live trading session. Let me know if you guys are hearing okay, that there's no chipmunk sounding voice, but of course on my end things seem okay. But yeah, welcome to today's live trading session. As you guys know, today is the 17th of January, 2024. It's a Wednesday. We're at the middle of a trading week, and we're going to try to identify some high probability trading opportunities in the market. We're going to first start off with these momentum plays, and then after that, later on, we'll probably do some top-down analysis. But yeah, the first opportunity I wanted to share right now was on the Aussie USD, and we're looking at the 1 hour chart, and actually it missed our pending sell limit order, came right up to the level and then slammed down. So then we're not currently in this trade. We're missing out on these good pips, but just because we don't enter a trade doesn't mean there's not another opportunity to re-enter this position or re-enter this trade. But this trade is somewhat risky, seeing that price already traveled its average daily range for the day. If you measure today's activity, let me just bring out this price range tool, and we can see that today's high is right around 65.95, around here, up here, and we bring it all the way down to the lows. You can see that price went beyond its average daily range. Usually on a Wednesday, it travels about 50 pips, 55 pips for the day. So if we were to enter a short, we were going to specifically take our target at the lows. We were going to assume that price wasn't going to make a continuation move beyond the lows. So of course, this was somewhat risky because usually price tends to reverse right when it gets to the average daily range. But we decided, hey, let's just take it as a good setup. We set a pending order, and it didn't quite get to our order. It went to the level, sort of, like we were like a pipette away from being executed. You can drop down to the 1 minute chart and see how close we were from getting executed. Right here, you can see right here, price went all the way up to here, 65,656, and we didn't get triggered. It was literally right there, right where our order was, but we didn't get triggered. So then the next thing we had to ask ourselves is, what do we do now? How do we get involved in this setup? Well, as you know, this is a 1 hour correction. So let me ask you guys this question. If price corrects on the 1 hour, what time frame do we drop down to in order to manage our trade and possibly re-enter on bearish confirmation? What time frame is that? Let me just see if you guys remember, because I know we haven't touched on this stuff in a while, and sometimes it's good just to give us a review of what we may need to do if we find ourselves in this situation again. But typically most traders get in on bearish confirmation, so then usually we'll drop down to a trigger time frame. But what will be the trigger time frame? So I know Adam, he chimed in and he said 15 minutes. So yes, he's correct. We'll drop down to the 15-minute time frame. So then let me do that right now. Drop down to the 15-minute time frame. And as you can see, well, let me ask you this question. I don't want to do everything for you. On the 15-minute time frame, does the environment look bearish or does the environment look bullish right now? Let me ask you this question. Does it look bearish or does it look bullish now? So because that matters a lot. But when we get in on trigger confirmation, we need to see the environment shift, a certain way to confirm that we're on the side of momentum. But in this particular case, okay, Naomi chimed in. She said bullish. Exactly. We're in a bullish environment because price pushed up, reached these highs right here, and the 20 SMA is sloping upward. It is sloping to the upside. This white line is our 20 simple moving average. It's sloping to the upside. So then what we're going to do, we're going to wait for a bearish shift in our environment, and we may get that when price breaks this zone right here. Let me draw it in. Let me remove this. I'll make this yellow. When it breaks this zone right here, when it comes down, breaks this level, then that's when we'll get bearish confirmation, possibly. So then what we can do, we can simply wait for that. We can wait for price to break down, break to the downside, and then look for a pullback into an area of supply or structure. And then from there, we'll look to short. We'll look for our sell and we'll trade it right down into this average daily range zone right here. So then, you know, we're not in now, but it's okay. We can possibly get in on another second retry with, you know, buyers coming in, creating this pullback on the 15-minute time frame and then executing our sell from there if we get that pullback. So that's what we'll be looking for on Aussie USD right now. We missed our entry. Now it's time for us to recalibrate and try to plan for another opportunity to get in on this expansion to the downside. So that's what we're going to look for right now. And, you know, one thing I want to point out, there's going to be tons of trading opportunities where you will miss your opportunity to either buy or sell. And that's okay. Because, of course, if you miss out, there'll be another opportunity sooner or later. One thing you could get from this is that at least your bias was correct. At least your assumptions was correct that when price gets to this zone around here, we should see the sellers come in. And that's exactly what happened. So then don't beat yourself up if you don't get into a trade. That happens. It's going to happen a lot when you're trading, but just move on. Don't let it frustrate you. Don't let it cause you to trade impulsively and jump in on an already moving train. Just wait for price to come to you and do what it has to do. In this case, we're looking for a bearish environment shift on the 15th and then look for your opportunity to short. But yeah. So yeah, Marvin, did you have anything you wanted to say to chime in on any of this or no?
Well, yeah. Well, first I want to say good morning, everyone. Yeah, like I guess, you know, we can briefly talk about the Aussie and why we see it selling off. And just like Melvin said, he's taking advantage of that pullback, that retracement that we see on the 1 hour chart, but we weren't able to get in. So now we're trying to get in on a sell with the 15-minute break of support. But what led to the pressure to the sell-off in the Aussie, or in really most of the commodity linked currencies, or even the antipodean currencies in general? And so that you guys know that for the Australian dollar, it's commodity linked. It's linked to hard commodities like our metals, our base metals, our precious metals, because they're a mining economy. And in the same way, South Africa is also considered a mining economy because they mine gold. Australia is a mining economy as well. They mine gold and other metals as well. But, you know, we see that there's a sell-off in metals due to, well, you know, I'm kind of jumping ahead of myself, but primarily due to the fact that, okay, did the Fed overshoot their whole odds of rate cuts? Did they overdo it, like the rhetoric, and how and whether we should cut rates, you know, urgently or as quickly as they had planned for 2024? So then that's what's leading to the sell-off from precious metals. So then simply because precious metals and certain other types of metals are being impacted by that news, it's going to affect the Australian dollar. But really, to be honest with you, the Australian dollar is mostly affected today by the news coming out of China. We had a slew of data, this huge data drop from China. We saw that the numbers didn't come in as encouraging. We did see some discouraging numbers, but for the most part, they did meet the forecast. Like the numbers weren't a huge surprise coming out of China. Like we had China housing data. I think we had industrial production. We had China retail sales, and we did see it pick up somewhat or meet expectations, but it was within the reports. And it was, of course, further details about the Chinese economy that caused markets to sell off, that created this risk-averse mode during the Asian session. And we saw the Australian dollar sell off along with the other antipodean currencies like the New Zealand dollar. The Australian dollar and the New Zealand dollar, since they're close to China, since they're in that part of the hemisphere, that part of the world, what happens in China greatly affects how their currencies move and what happens with their currency. So you can trade the Australian dollar as a proxy for the Chinese yuan if you want to trade on that Chinese data news. But you know, that's what's adding to the pressure, the downside pressure in the Aussie, along with, like what I said earlier, the U.S. dollar maybe having to adjust those bets or odds of rate cuts. I know at one point the market expected 7 rate cuts this year. Is that realistic? Is that really realistic in an election year? I don't think so. But for the most part, right now, you have a lot of Fed members saying that maybe we overshot, or maybe we sort of hyped it up and made the market think that we was having issues. But really looking at the data, we don't have to go that quickly. We don't have to cut rates that quickly. So yeah, that's what's also adding to the downside pressure in Australian US dollar as well. So yeah, that's what I kind of wanted to add.
Yeah. But I wanted to point out here that you can see that price is having a difficult time breaking the low. It wicked into this area. It looks like it wants to push back up. So there's a possibility for this pending sell limit order to be triggered. Price could very well come all the way back up, trigger our order, tag supply exactly, and then head back lower. There is that possibility. So only time would tell, but we'll be prepared for whatever comes. So then what we're going to do right now is place a price alert right at this area right here of structure on the 15-minute. We're going to be notified when price crosses down and breaks and closes below it. So we're going to set a cross down, horizontal ray, because this is a horizontal ray, once per bar close, and we'll just be notified. So if price does break, then we'll have another opportunity to possibly re-enter. And sometimes we won't even have a possibility to re-enter. But you can re-enter either on a 15 or the 5-minute. It all depends on what you see. But yeah, so in this case, we're going to say break and close below structure. Look to sell on PB. Now I'm going to say 5 or 15 because it could either be on the 5-minute or the 15-minute as far as a pullback. And yeah, we'll just look for that. But yeah, we're going to look for an opportunity to trade Aussie USD, and either we will get our trending or our pending order triggered, or we'll wait for this breakdown and then this pullback. So we shall see. But click on create, and yeah, we're pretty much good. We're pretty much good. So then we'll see what happens. We got these alerts, so then we'll be notified whatever happens. Yeah. So yeah, we'll see. Maybe I should place an alert right here too. Just to no. So at 65.68, just say order triggered maybe. Do just say pending sale order triggered, then put question mark, because sometimes you never know. It may not trigger, who knows. But that way we'll get notified and then we can manage this position, because for all you know, because price hits the average range, we could see price reverse from here on. It can reverse and push back up and try to stop us out. And if that happens, that's okay as well. But what we can do, we can manage our position. We have a wide enough stop to where price could come all the way back up, and we can see signs of bullish confirmation, and then it can come down and tag us out at break even before it pushes up again. So then that's what we typically look for when managing. If we're wrong, That's only if we're wrong. But yeah, that's pretty much it. So are there any questions? If not, then we can move forward to our next setup, our next opportunity. Let me for starters hide this because I don't like this being on the 1 hour. Keep it right there. Yep. And all right. So if there aren't any questions, I guess we can move on. So yeah, good morning, Joe. Thanks for coming. It's been a while. I'm glad you can make it. So all right. With that said, let's move on to our next setup. Let's go to let's do US dollar Japanese yen. Let's stay on these US dollar based pairs for now. I do have some more to share with you because we did get a lot of activity last night, especially on the pound. But yeah, USD JPY, US dollar Japanese yen. We're looking at the 1 hour chart. So right here, what we can see is that price has been impulsing to the upside. We had an impulse, correction, impulse, correction, impulse, correction, impulse. So almost like 1, 2, 3, 4, 5. Well, it's a little bit more than 5 waves. But anyways, what we're going to do is pretty obvious. This is a bullish environment. We see a bullish environment on a 1 hour. We see a bullish environment on a 4 hour. And this trade is really a continuation of a buy that I entered on last night during the Asian session. I think I put that buy in the profits portion of Discord, so you guys can take a look at it. But that was based on a smaller 15-minute. Well, no, it wasn't based on a 15-minute. Here it was right here. Yeah, it was based on, I think, a 3-minute, 5-minute correction. No, it was 15-minute because it usually moves slow during the Asian session. But, we had this zone of demand. Let me just give you guys the logic behind this. So we had this zone of 15-minute demand right around there. 15-minute demand. And we got in a little bit higher than that. I think we did get wicked. I can't remember what happened, but yeah, we had demand there, and then we have you can even see we have this gap, this imbalance in this area. So then we sort of knew that price was going to turn or pivot in this area, and that's exactly what it did. I think you can see this better on the 5-minute. Yeah, you can see us get triggered a little bit better on a 5-minute, right around here. It's a little bit above this demand zone. But yeah, that was the logic behind that particular trading decision. And as you can see, price immediately pushed up. We didn't really get any drawdown. Price immediately pushed to the upside. So then, yeah, sometimes when you get your levels correct, you can get in on a trade and have very limited drawdown, just like with the Aussie USD. As soon as price came to that area, it collapsed. So, of course, we're going to go over more things real soon to help you guys determine how to find the right levels. But, there's some things that go with it, like a lot of nuances. Yeah, it'll take a while for us to explain everything, but there is a way you can predict more precisely which levels price would turn or pivot at. So, but yeah, this right here was a quick move, and just imagine if we would have held out this move and trailed our stop. It could have turned into a pretty massive winner, and yeah, but of course we did not take advantage of that move. So right now we're in the middle of a pullback or correction on the 1 hour, and I think well, price could either push to the upside and test the highs before it falls down again. But I'm thinking that price is going to go to this very same cluster zone right here where we were before. That's what I believe. So let me remove this and let me just identify this particular cluster area, this balance area right here, because this whole entire zone can act as can act as demand. So yeah, I'll just put it right here. Let me just call this. But let me just see. Because this could be a 4-hour pullback. Let me go to the 4-hour. Yep, we do see this hesitation candle on the 4-hour. So it's quite possible for us to see price retrace all the way down to this zone right here. But yeah, I'm going to keep an eye on this. I really am, because I think price can do a number of things. But let me just we have this indecision candle right here. I just want to mark that zone where we have this indecision candle sandwiched in the middle. Let me turn this to green. Let me zoom in so you guys can see it. Okay, so right here we have this indecision candle as well, and right sandwiched between this red candle and this strong displacement candle. So then this tells us that this could be an area of balance as well, where price was likely consolidation and we had a break to the upside. So whenever price gets into this zone right here, where we have this blue zone that I just drew out, then that's when we want to be on the lookout for a potential buying opportunity. So that's the reason why I wanted to draw that on a 4-hour. But anyways, going back to the 1-hour, what we'll be looking for is an opportunity to buy on a pullback in price. So yeah, we'll see what happens, but yeah, this will be a good zone, good area to look for a buy at. So then if you wanted to, you can place a pending order if you wanted to. Let's do it right in this zone right here, and then we can place our stop somewhere behind here in this zone, and we could shoot for these highs right around here, 1.5 whatever. But this is a 1-hour correction right here, so of course you can plan for something like that to take place, where we can get a deeper correction into this zone for the US dollar, Japanese yen. But all the signs point to more movement to the upside. However, I think we are at an area of supply on a daily. Let me see. Are we at daily supply? Let me check. Yeah, almost. Well, we haven't quite tested these highs yet. I could see price doing that, but we are in this zone where we could see potentially strong selling come in. So then that's the reason why, we have to be somewhat cautious with this, because we could actually see a deeper pullback. Price can pull back all the way down to where this green line is, or where this neckline is right here on the 1-hour chart, because we can see that we had reversal, here on the daily. Price can pull it all the way back down, test this area, and then push to the upside. But yeah, so if that happens, we'll manage our trade properly. But yeah, so yeah, we'll see what happens. But right now we're looking for a buy on the 1-hour time frame.
Yeah. Yeah, I just kind of wanted to jump in and add to that, like, as far as what Melvin, just analyzed, like we see that the US dollar Japanese yen has been impulsing to the upside on the 1-hour. And just like he identified, we're at an area of supply that would technically, for technical reasons, would warrant us to see a correction and pullback in price. And that may happen actually, because we do have a slew of not only important U.S. data, but also a slew of Fed speeches and Fed members speaking on the docket, not only for today, but even through the rest of this week, right ahead of that Fed blackout window, where we got that 10-day window where there's no central bank speech ahead of a Fed monetary policy meeting. They sort of pull back from news wires, pull back from doing any type of interviews and speeches, because they don't want to influence the market and where prices go 10 days ahead of a monetary policy decision. So yeah, we can very well get this. You can see that it's been consolidating, at the moment, trading sideways.
This is on a 15-minute,
and
guys.
Depending on what comes out, I know we have a speech from Fed Vice Chair. We have a speech, I think, from Bowman and Fed Woods. But we also have U.S. retail sales data that comes out. And if we see that data comes out in support of dollar weakness, like let's say it's soft, like the retail sales numbers are soft, and then that may sort of adjust odds or bets of, just them having to rotate. Like that's kind of what I was mentioning earlier, that right now we're seeing this sort of shift in January where you hear a lot of these analysts say that maybe they overdid it and actually pricing in rate cuts. So then that's the reason why we're seeing the US dollar Japanese yen rally for the past few sessions on dollar strength due to bond yields moving higher. You remember the US dollar Japanese yen is at the mercy of the bond market, and it's been rallying on dollar strength, but we could get that dollar weakness to come in if we do get a weak retail sales number, or if one of the Fed speakers say that, no, we should cut rates and we should pick up the rate of cuts. That would definitely weaken the dollar. So then that comes up in a few minutes. It's at 8:30 Eastern, 7:30 Central Time. In a few minutes, that retail sales figures would come out.
Yeah, so we'll see what happens, but price could very well break to the upside. And I wanted to share with you, what we could see is something similar to what we may see on the Aussie USD. We may see the US dollar Japanese yen break this level to the upside. And I don't know if you guys see it, but what pattern do we see in this consolidation? What does that show us, this consolidation? It shows us a particular pattern right here, or this pullback specifically. But let me just draw it in. Yeah, we could just put it right around here. But this is a descending channel, or what some would consider a bullish flag pattern, and we can see price potentially break to the upside. So, if that does happen, then we could look to get in on a pullback. Because price may not come back down here and trigger this order, but it's up to you what you decide to do. I know we have quite a bit of supply in this area, so then there's a possibility we could see the sellers come in right. Yeah, the sellers can come in right around here and cause price to turn around again. That's a good possibility. So we do have 15-minute supply right in the zone. So then that's something that we definitely have to monitor and look for. But for the most part, we'll be getting in because momentum is pointing to the upside. You always want to stay on the side of momentum. I cannot emphasize that enough. Stay on the side of momentum. But if price does break this level right here, then we'll get a pullback, and then we'll look to get in at some area of demand, even though we're hitting supply, and then we'll just manage the position. If we're wrong, we're wrong. It's okay, because you're going to be wrong. No one's going to be right all the time, and that's what you got to be okay with. In this business of trading, you have to be okay with the idea that you will lose, and you will lose. I'm not saying like a lot, but you will lose. You will lose often, and you have to be okay with that.
You account for it with the money.
Yeah. And I don't know if you heard Marvin. I know he's whispering in the background, but you account for it with the money management. Is risk management, money management is key and is important. And really, all you need is really proper money management and risk management to do well, and even to win these funding challenges. I know that's the big thing right now. Everyone's gravitating to these funding challenges more so than them depositing money in brokers. So then brokers aren't doing too well now because of these remote prop firms, these simulations, simulated funded accounts that's going on right now. But that's another topic in itself. I'm not going to talk about that now. But for the most part, we'll be looking for opportunities to get involved if we do see a break, an expansion to the upside, and a dip in price. So and also I wanted to point out, remember, guys, I gave you guys a US dollar equally weighted index for a reason, because the equally weighted index can actually help you. And in this case right here, we see even on the 15-minute, price is breaking to the upside now. Wow, broke to the upside now. It's pushing up. So we probably would have got stopped out, or it probably hit our target on Aussie USD. But yeah, right now it's hitting this area. So then
the US retail sales.
Yeah. That's the retail sales announcement. So it would have been good if we would have been in that trade, because I do believe our AUD USD shot lower as well. So we may have to abort that idea right now, which I think I'm going to do because we probably are at the lows. We probably are at the lows right now. Yep, came down, hit us at the lows. For some reason, it's taking a long time for, yep, came down. So, yep, went down. Yep, pretty much. So then, yeah, I'm just going to close this this limit order for now. We missed out on this. This was a good trade.
Barely made it.
Yeah, we just missed it by a pipette, but that happens. Don't get so overly frustrated. Just, look at it, and you can, we could take a screenshot, put it in our book as far as a good trade. It's just that we weren't able to capitalize on it at the moment because we were off by not even a pip, but a pipette, like literally a micro pip. We were off. So it happens. But yeah, price would have hit our target and we would be somewhat out of the trade. Well, we wouldn't have quite hit it. We would be, well, it would be almost there. But yeah, we're in this average daily range right now. It's probably going to react and respond to this level and bounce from this level right here, which is what I'm assuming. Yep, looks like it wants to bounce. So yeah, what I'm going to do, I'm just going to delete this pending sell limit and look for another opportunity. So then let me do this right quick before I forget, because I don't want to forget. And then, in the middle of the trade, in the middle of the webinar, we get triggered. And I'm like, oh, okay, what's going on? Because I've been on the wrong side of this too many times where I've had pending orders that I forgot to delete get triggered, like literally. Like that's one of my problems, actually. One of the mistakes I have to really get rid of this year is making sure I delete those pending orders, because I've been on the wrong side of that where a pending order that I had that didn't get triggered, price eventually comes back to it, triggers it, but by the time it comes back to it, it's in that reversal phase and we get stopped out, or I stop out with a small loss. So then I have to get rid of those in order to increase my profit margin. So then that's something that I have to work on in 2024. But for the most part, all is well. But yeah, so yeah, I deleted that order because of this move right here. It would have been great if he would have been in it. It would have been what I think. How much R multiple? 1.5R. That would have been good for today because we did well, there's 1.7 R from earlier in the Asian session, 1.5 R. That's combined 3.2 R. That's good enough for today. But anyways, let's move on and let's look at something else. So I deleted that, and yeah, because I think we could be seeing price push to the upside. And for all you know, price could, let me just go back. Price could do something like this where it corrects. Well, for one, we need to wait to see if how this 15-minute close. It can close with a long wick above this neckline area, which it is right now. See how it's responding. See how it's reacting. Well, yeah, it went back lower below it, but it could actually close above this pink line, which means that we have a lot of strong buying in this area, and there's no reason why we should look for a short or sell. So yeah, we just have to take that in heart and mind, and yeah, just know that could happen. But yeah, for the most part, yeah, I'm out of. I deleted this pending order, and I don't know if I'm going to actually get in on a pullback. We'll see. I'll revisit this later. But yeah, let's go to another setup. Let's do euro yen. Let's do euro yen. Let me go there. Euro yen. Okay. So yeah, this is euro yen, and we're currently on the 1 hour chart. And what we can see here is that price has been moving up. It's pretty obvious. We've been saying price make higher highs, higher lows, higher highs, higher lows. You guys understand how that works. But we expanded, made a higher high, and then you could see price trapped in this range, almost like this topping consolidation range. But the environment is very much bullish. If you look at this chart, the 1 hour has a bullish bias, 4 hour has a bullish bias. And let me go to the daily chart to see how things are looking on the daily. The daily as well has a bullish bias. So all signs point to momentum to the upside until we see a reversal. And that can be happening now. Oftentimes, we don't know when reversals happen. They happen. And when they do happen, we may get stopped out, but at least we know that price is reversing. So then we can plan accordingly. So this is the reason why losses happen, because it's hard to predict exactly when those reversals will come. But for the most part, we're going to look for buy opportunities only on the euro yen. So going back to the 1 hour chart. Going back to the 1 hour chart. What we see here is consolidation and topping. You see these indecision candles right here, and these candles, these long wicks, porcupine wicks right here. So this tells us that this is an area that you don't want to be trading in. We're likely topping or consolidation, but we can expect a deeper pullback, possibly to this area right here. So then what I'm going to do is draw in this zone from here all the way up to here. This candle right here, this red candle right here, which acts like a mother bar. Draw this and identify this as our zone of demand. So this is we'll say this 1 hour demand. 1 hour demand zone. And then what I like to do is also look at the 4 hour to see if we have anything on the 4 hour. And this is quite similar to what we saw with the US dollar, Japanese yen, because we do have this indecision candle right here, which speaks of consolidation and balance. So then let me just draw that in right here. So we do have some type of consolidation happening in this area. And let me make that blue. So what we're going to do, we're just going to simply wait for price to come to us. We're not going to chase the trade. We're going to wait for the trade to come to us. So we can potentially see price push down eventually all the way down to this area right here where, we can put our stops at, behind this zone, behind this area. And try to ride it out for a decent move to the upside, maybe close to 161, maybe right around there, which will give us a 1.3. So then if you wanted to, you can maybe tighten this stop up a little bit, maybe snug it right there. But yeah, this is the the euro yen, and we'll be waiting for price to come to us. And the reason why we'll be doing that is because we don't really want to trade in all of this. Like, it's apparent on a smaller time frame, we can tell that we have sellers at the lows, have buyers at the highs. Let me just do that right quick and show you. So we have buyers here. Let me make that green. And then we have sellers here. And as long as we're in this zone right now, we may not want to be involved. And you can see that more clearly on like the 15 or 5 minute. You can see that we're in this range, in this consolidation, in this range. So as long as price is ranging back and forth, it's best to avoid this opportunity. Just wait for a breakout. And in this case, we're waiting for a breakdown. And right when price gets to this zone, we'll look for a buy, because I think once that happens, they'll gather more liquidity, gather enough orders in order to create this expansion to the upside. But we'll see. Now, if price does break to the upside, then that's okay. That's good, because now we know that this balance area, this consolidation, this whole consolidation right here will function as an area of demand. So if price does break it to the upside without pulling back into our zone that we were looking for buys at, then we'll just wait for price to come back into this balance area, and then look for another buy. That's all we will do. But I hope this is helping you guys out. But anyways, this is euro yen. We're looking for a potential buy, a potential pullback buy on the euro yen. And while price is in this zone, we're not going to do anything. We're just going to wait for price to come to us. It's either going to come to us or it's going to break out to the upside. But yeah. So yeah, that's pretty much it. Yep. So are there any questions in regards to this euro yen? So we can just have this pullback into this zone, and then price can push to the upside right here. So yeah, this is what we're expecting and possibly looking for, something like that to happen. But right now we're in this range, so we're at a standstill. We're not doing anything.
Right. Yeah, we're in this corrective phase. So yeah, excuse me, guys. Yeah, we should be definitely in a standstill waiting for price to hit those particular levels. But
or break out to the upside.
Yeah, exactly. Or break out to the upside. But what I wanted to touch on is why the euro is rallying. Why is the euro as firm as it is? And it's probably, I mean, really, to be honest with you, it's due to really the same reasons why we see the US dollar rallying. And that's because in the Eurozone, some of the Eurozone policymakers, the ECB president, Christine Lagarde, they feel like it's too early to celebrate that they've dealt with inflation, that inflation pretty much has already been tackled. And although they're, moving towards, their 2% target, inflation is still somewhat pretty firm. Like we recently had German CPI data come out, Eurozone CPI data, which showed that inflation and pricing pressures did firm a tad bit. And we're also witnessing the same thing in the US economy as well. So then we see that both sides of the pond, whether it's in the US or whether in the Eurozone, the central bank policymakers are saying the same thing. They're speaking the same thing, that it's too early to celebrate. Maybe they jumped the gun and sort of signaling that they were going to do these aggressive rate cuts next year, or pretty much the market interpreted or felt that the Fed was going to do aggressive rate cuts. But really, they really, to be honest with you, they really only priced in 3 rate cuts for next year. The Fed did, but the market, that means the everyday average Joe, the everyday investor, trader, analyst believes that the Fed is going to do more than 3 rate cuts. They're going to actually do 6 or 7. So then right now, the Fed is pushing back against that. They're saying that that's too aggressive. And also we see the ECB is pushing back against that whole aggressive rate cut narrative. And they're saying, no, like we're still not out of the woods yet. Inflation, yes, it did pull back, but we may get that double peak, or we may get a pickup in inflation before it starts heading lower towards the target again. So then all of that news is what's underpinning the euro. It's what's underpinning the sterling as well. We saw the British pound rally. And right now, as far as this trade, we're just waiting for a pullback in price in order to get in for an extended impulse to the upside. But yeah, I just kind of wanted to touch on why we see the euro firming.
Yep, exactly. So then, yeah, we'll see what happens with this. But yeah, for the most part, let me see. Am I going to do one more or not? But let me go to the Aussie USD. Let's see what happened with that Aussie USD, because I know we have 1 more minute until that 15-minute candle closes. And let's see what happens with that. And it looks like we're a little bit below it. Yeah. Yep, we're somewhat below. So we got 20 seconds until that happens, but I'm not going to jump in on this for a few reasons. I'm just going to maybe hold out on this particular opportunity because we could see price pull back and then expand lower, but this wick is telling us that this area is definitely demand down here. It's definitely demand. So yeah, we did get our alert. Price did break to the downside, and let me see. We get how do things look on a 5-minute? Yeah, this is the 5-minute. Yeah. yeah, I'm just gonna sit in my hands for now. But it looks like price may want to come down and tag or push a little bit deeper in the zone. But yeah, all right. So yeah, I'll let you guys know what I decide to do with this. As of now, nothing. So I'm just going to maybe go to, well, I'll do one more, and let's do pound Aussie. Let's do pound Aussie. Okay. So this is the pound Aussie. We're currently looking at the 1 hour chart, and you can see that overnight we had a strong expansion to the upside. I think Marvin mentioned briefly about that, but for the most part, we're definitely in a bullish environment. And if you want to, you can do top down. You can always start at the daily and work your way down. But we see here that on the daily chart, we are testing what appears to be daily structure resistance or daily supply in this area right here. So, you know, we definitely have to be somewhat careful because you never know, price could be in the middle of a reversal. We have this nice impulse to the upside. Stochastics is overbought. There's a likelihood we can see, you know, we could see some selling come in. But this move is pretty strong, and like this expansion for today is quite strong. So we may see a continuation. Price may break this zone to the upside. So then as of now, there's no reason for us to look for shorts. We don't see any signs of consolidation or price slowing down. So then what we're going to do is continue to buy. We're going to continue to look for buys. So going down to the 4 hour chart. Yeah, for some reason it's taking long for this to turn now. But yeah, this is the 4 hour chart. We do see price expanding up, and there's a possibility we could see buyers come in right around here. This is 4 hour demand, and that's what we'll typically see. If this is daily supply, usually when price goes to daily supply, it'll come down to 4 hour demand and then retest the highs again before going back down to daily demand. So, you know, we want to definitely include this 4 hour demand zone right here. This is 4 hour demand. 4 hour demand zone. And let's go down to the 1 hour, but the 4 hour is bullish. 1 hour is also bullish. And yeah, right now we see a strong displacement with a strong expansion candle right here in the middle of this move to the upside. Price is slowing down up here, which means that we're due for a correction. The question is, where could price correct to? Well, for me personally, I need to see it come all the way down here. That's the only way I want to get involved. So if price comes all the way down to this cluster area right here, where we drew in on the 4 hour, and we can see here that this is 4 hour demand and 1 hour demand, that both of them are showing confluence, that this area is an area of demand. Well, if we see price come to this zone or to this area, then what we want to do, we want to look for an opportunity to buy. So yeah, I'm just going to do that. Look for an opportunity to buy, trade it up to the highs, and then yeah, that'll be it. But yeah, this is going to take a while because we had this strong expansion to the upside, and we can get a shallow correction. Price can very well give us a shallow retracement where, you know, we won't be able to get in at all. You know, that does happen. We could see something like this where price comes to this imbalance candle and then pushes up. And if that does happen, then that's fine, because what we'll do, we'll have new demand. New demand will form right around here, and then we'll look for price to come right back down to this new demand and then push up. So then that's how it usually works. But it's all about repeating the same things over and over again. Trading is not hard. The most difficult part is the mental sport of trading, the mental game and the emotional game, the psychological part of it. That's the part that takes a while to conquer. But other than that, trading in and of itself, it's simple. But what makes it hard is all the other stuff, like the psychological stuff, the emotional part of it. But yeah, anyways, do you have any questions? Going once, going twice? Okay, well, what I'll do, I don't know, Marvin, if you had anything you wanted to share, you can share, a bit more if you wanted to. But yeah, um, yeah, that's pretty much it on my end. And what I'm going to do is pass the mic over to Marvin, and he's going to talk about what's been happening politically, fundamentally, all that good stuff. Yeah. Yeah, well, I'm not going to be on here too long. I know we may do the private war room later today, so yeah, I just kind of don't want you guys to be tied down for hours. But I'm just going to briefly go over what futures markets are telling us at the moment, because really you got to get a sense of the micro flows. Like micro flows are related to what is the overall sentiment, like what is the overall feeling. Like when you see asset prices move, when you look at the trend, what does this tell you about the intraday narrative? So then what I want to do right now, well, for one, I just want to start on the daily chart and then just go to all of the future indices. So then right now we're going to go to the one that most of you guys love. It's the NASDAQ. So then I'm just going to go right here, maybe do US 100, just do that. That's just a one for the, the futures. But as you can see here, you can see that right now, this is the daily chart, and it's been moving to the upside. It's been trending it to the upside, but it has found supply, and it looks like it could be forming that right top, possibly making its way down, but we don't know yet. All we do know is that it's encountering resistance up here. It's encountering supply, and it's moving lower at the moment. So then right now it's consolidating at the highs. It could be a form of distribution, but we won't know for sure until we see it break and close below these lows. But on the 4-hour, you can probably see it better, that consolidation. Yeah, I don't. What do you want to? Well, yeah, you can go there right quick. I'm not going to talk about it too much, but on a 4-hour, we can see that price was ranging in a range consolidation. That's the reason why the Nasdaq was sort of difficult yesterday to trade, because it was at that supply, that daily supply, and it was moving back and forth in that range. So then once it cracks the range, then you can have more confidence in that momentum heading lower in that short opportunity. Yeah, to test this neckline down here. But right now we're in this mode of ambiguity. Of course, there is a slight bearish bias on the 4-hour, but just like Melvin said, it's been really trading within a range. You can identify the range here and here at the top, the highs. And really, this has a lot to do with the change in narrative that we've been hearing from central bankers. You remember last year, there was talks about aggressive rate cuts, that we have approached the end, that it's time for the Fed to start cutting rates because we're seeing signs of recession kick into the market. But just like today's retail sales numbers actually came out firm. They came out very strong, solid, beat expectations. I know it increased. Retail sales increased by 0.6% in December. And of course, we had to keep in mind that was during the time, for the holidays. So then we could get some of that holiday shopping being factored in. But I guess this would even build the case for the Fed and other analysts to sort of say, hey, did we jump the gun too soon? Did we signal rate cuts too soon? Maybe we need to pause and maybe hold for longer instead of moving to cutting rates instantly or quickly. So then that's what's really adding to this downside pressure for today. We see, just like on the daily candlestick, we see the NASDAQ selling off, and we see this deep red candle, even though we're not at the close. But this type of sell-off really is reflective of some risk aversion, some deleveraging, some selling of stocks, simply because the market could be saying maybe they may be holding rates higher for longer, and there's no need to hold on to something that's a risk sensitive asset when there's a possibility that liquidity conditions may remain tight for a period of time. So then we're seeing this sell off here, but let's see if we see the same thing in the S&P 500. So then I think this is US 500 right here. Yeah, this is the US 500.
And we can see the same thing, almost like that consolidation, that double top. And if we go down to a smaller time frame, we can probably see it easier on the 4-hour. And one thing you need to keep in mind that the S&P 500 and the NASDAQ are quite similar. So then we see,
Yeah, this looks like it has a more of a bearish tone.
yeah. So yeah, exactly. So then you can see that it's a little bit more bearish, even though it's within a range, but it pretty much is about to crack and close below this range. I know it has like an hour left before this candlestick closes and confirms that bearish sentiment, that bearish rotation. But you can see here that the S&P 500, which is really the chief benchmark that we look at to sort of get a broader view of what U.S. equities are doing. So we look at the S&P 500 for that, since it has 500 companies. They have big tech companies, have a diverse array of companies with under 12 sectors or 11 S&P sectors, where there's consumer staples, defensive, energy. They have all of that in the S&P 500. So then this is an index that is more reflective of kind of broader U.S. equity market, U.S. stock market sentiment. So we look at that. So to see that it has this bearish sentiment, could this be indicating to us that we're about to see a deep correction in U.S. Stocks? Are we going to see it sell off as these Fed members start, picking up the rhetoric saying that we need to probably pull back on these rate cut bets or these rate cut expectations? So then we see that. Let's go to the Dow real quick, US 30. And are we seeing the same thing? We're seeing sort of like the same thing. And actually the Dow is a little bit more bearish. This is on the 4-hour chart. You can see it's very bearish. It's pretty much in a bear trend. But let's go to the daily first, see what the daily is telling us. And as you can see, it's been selling off. So this is just letting us know that today is a day where right now, as you can see, pre-Wall Street, U.S. futures are tumbling lower. U.S. futures across the board are tumbling lower, and they're following suit behind European stocks. European stocks were falling lower, fell lower. Asian equities started selling off and falling lower after that Chinese data dump. So then we're seeing a handover of that same negative sentiment, or sort of like risk averse sentiment, even for today. But what's interesting is that you can't really say that the sell-off is due to risk aversion. And the reason why is because if there was risk aversion and flight to safety, we would see the Japanese yen strong. We don't see any of the safe haven currencies like the Japanese yen or any other currency strong. We see them actually weakening for the session, which just lets us know that this is pretty much yield based. This is related to real yields versus flight to safety. It's just that the market feels like, well, if rates are going to be too high, we just may need to pull back some of our aggressive buys and not be too heavily concentrated in risk sensitive assets or high yielding assets. So that's why we're seeing a sell-off, not necessarily due to fear or panic, but due to just higher interest rates. So then, and we can prove that even if we pull up, let me just pull up the Japanese yen equally weighted index. You can see the Japanese yen equally weighted index has been going lower. Like for the past few days, it's been trading lower, even when there were signs of this turn, even in U.S. equities. So then, some people would say that, well, that's a decoupling of the correlation. No, like the correlations are somewhat still in place, but the reasons behind why assets move could vary. It's never always one thing or one reason behind why stocks move the way they do, why currencies move the way they do. There can be a plethora of reasons. And in this case, the reason for stocks falling is not due to risk aversion or flight to safety, since we see the yen that usually loves misery is selling off, is primarily due to higher yield. So then what are real yields telling us? Not your treasury yields, but let's go to real yields. And let's see if we see real yields picking up, which is our treasury yields minus inflation expectations. They price out the impact of inflation to get an idea of what it's doing. So then let me see if this is okay. This is real yields, right? This is not a good chart, but let's go to here. This is right here reflective
of real yields. It's the 5-year yield minus 5-year inflation expectations. If you can write this down, the US 5-year, the nominal yield, and they price out 5-year inflation expectations,
minus
or what they expect inflation to be in 5 years. So as you can see, for the past few days, we've been seeing real yields pick up here. It's been picking up to the upside, even on a 10-year level. If we go to the 10-year, we've been somewhat seeing the same thing. Real yields picking up, and if it breaks above these highs right here, that would be a deep sign, and we should see a deep sell-off in gold. We should see a deep sell-off in a lot of our commodity assets, and we should see the dollar strengthen, because the dollar really trades at the mercy of real yields, or really treasury yields. But really, when you price out inflation, real yields become a more greater indicator of where the US dollar would go. So then the US dollar should be strengthening. And if we go to the US dollar index, or the Dixie, let me just do this real quick. I can have this here. You can see right here, this is a 15-minute chart that the US dollar is strengthening. Let's go to the daily right quick, and we can see that it has a strong bullish candlestick for the time being. And you can see that yeah, it could be in the midst of rotating, reversing higher and moving higher. And we not only see it there, but we can also see it on the Dixie. I know we don't bring up the Dixie because that's more of the trade weighted index, but that is the US dollar index. And if you bring up the Dixie right here, we could see the same type of dollar strength movement. So today, there's reasons to be long on the dollar. We saw the retail sales data come out, and we see what U.S. equities or what futures are doing. So we want to stay on the side of what the market is telling us until we see otherwise. So that's it for my fundamental analysis for now. I could go over what we can expect this week, but yeah, this week is not really that big of a huge deal. It's not as many macro events this week, so we will be paying close attention to a lot of the Fed speech that comes out throughout the week. But yeah, that's pretty much it. So let me hand the mic back over to my brother. Yeah. So all right, guys, I'm not going to be in front of you for too long. Yeah, I definitely want to look at gold. That's what I want to look at right now. But before I do that, I want to go back to that Aussie USD, because there may have been an opportunity for us to re-enter that sell. This is just me being who I am, loving to look at pairs and how they move. But yeah, you can see that it pushed a little bit lower. It pushed a little bit lower, I believe. Let me go to the 1 hour. Yep. Well, yep. Well, it's still around the same area, same vicinity. I don't know if we would have had an opportunity to short this. Yeah, probably would not have had an opportunity to. But I'm going to keep an eye on this because depending on a few factors, we can potentially see price expand lower and then provide another pullback. So yeah, I'll let you guys know. As of now, I'm not preparing for anything. Excuse me. Okay. So with that said, let's go to gold, right? Yeah. But I think we could have probably got in on here on this one right here on a 5-minute. Just pull back and then. But anyways, let's move on. Let's go to the daily chart, and we're going to go to gold. We're going to go to gold, XAU USD. And I'm going to make this real quick. I'm not going to hold you guys for too long. Okay, for some reason. XAU USD. You have to do the extra U. XAU. Oh, yeah. Yeah. There we go right here. All right. Yeah. Okay. So, as you guys know, this is what we shared a few days ago as far as, what was happening on the daily time frame. We did get this brief push to the upside. Now price is retesting this ascending trend line support. That can act as still support. We can still see price bounce from this area. And if you go to the 4-hour chart, which we're going to do right now, you can see that price, when it was at the lows, went all the way back to this B point, anchor B, or where this pivot took place, which usually happens. But right now we're consolidating after price made this complete retracement lower, and it broke through where we could have been looking for an opportunity right around here. But right now we see price testing 4-hour demand. Let me delete this. It's testing 4-hour demand. And yeah, I apologize. I'm just trying to get rid of all of this because I don't want this to confuse you. But it doesn't mean that we can't see buyers come in. Buyers can come in, but of course, right now we see that price. Let me delete this. Right now we see that price is in a consolidation phase. Right here, we can just draw. You can literally draw a square around this area, because what we do know is that price is in the middle of consolidation. It's moving sideways right now, right at this ascending trend line support, right at this 4-hour zone of demand, which is what we could include right now. We're at this 4-hour demand zone. So there's a possibility we could see price push higher. But if you want to look for sales, then wait for price to clear this low first. Wait for it to clear it, so it could be obvious that momentum is shifting, and then look for the pullback and then go lower. As of now, we just wait for a clue that price either wants to move higher or lower on gold. But if you drop down to the 1-hour chart, you can see this consolidation or this bottoming a little bit better. You can see that price, is sort of moving slow, but we actually could have got in on this sell. Actually, this was a good sell opportunity on gold. We could have sold just like we sold on Aussie USD. But what we're going to do, we're just going to simply sit on our hands for now, because we know that price is testing an area of demand, and there's a possibility we could see price rotate. So
yeah, there's always a possibility we could see, assets, these instruments, honor these levels of demand, these areas of demand, and rotate higher. But just like I pointed out with, a few minutes ago, with what we see happening with treasury yields, if that continues to hold, if we continue to see treasury yields remain firm or real yields remain firm, then that would build a case for this possibly, potentially, the path of more, I guess, I don't want to say least resistance, because there is, support there, but it is to the downside for further sell-off in gold, as long as we see real yields continue to remain high and move higher. But we don't want to just trade based off what we think fundamentally on an intermarket analysis basis. We want to base our trades off of what we see technically. And if what we see technically agrees with what we know fundamentally, then that serves as confirmation that we're on the right side and we're looking at things correctly. So right now, gold is sort of like in this indecision mode. Yes, there's a slight bearish bias. The trend is down. So, but as of now, since it's at these lows, there's no point of executing a sell now. If anything, you'll be waiting to execute a buy.
Yeah, and there's reasons why. The reason why I say you want to wait is because right here, we see that price created this move right here. And of course, we can stretch it out. This is a descending trend line. We can see that price is in the middle of what appears to be a potential reversal, because right around here we have what we know to be a falling channel. after a strong impulse lower. So whenever you see price move strong to the downside, almost parabolic, and then it starts moving lower, but the momentum slows down, that means that we could potentially be in the midst of a potential reversal up. So then that's the reason why I'm saying, hey, with the way things look, we could be due for a reversal soon because of that momentum shift. Because well, let me just delete that last one. I don't really need that, but we see here that we had this strong move to the downside, and then all of a sudden, right now, we still see price move to the downside, but it's weakening. You see that move weaken, like it's not moving as fast as it was before. It's slowing down. So whenever you see that, then that can be an indication that things could be reversing. Now, when does it reverse? It could reverse later, because for all we know, it could traverse back and forth within this channel until we see this happen, a break to the upside, a break of that descending channel to the upside, and then price comes up. So Marvin is correct. Right now there is no reason for us to buy yet, but just be aware that the buyers could be coming in soon, and you may want to look for an opportunity to buy if you do get a breakout of this descending channel, or this falling channel pattern. Yeah. So yeah, that's pretty much it, guys. Like, I don't have too much more to share with you guys. Thank you guys so much for coming to today's session. We really do appreciate you guys. And as we always say at the end of every single meeting, remember to always count your blessings, not your pips. And we will definitely see you soon. Stay encouraged, stay blessed, and hope you guys have a wonderful day. We'll let you guys know if we do meet in the private war room. There's a likelihood that we will, so we'll let you know about that in a little bit. But thanks again, and we'll talk to you guys later. All right, bye.